Treasury Cabinet Secretary Ukur Yatani yesterday read the 3.3 Kenyan shilling trillion budget for the financial year starting July. Now, this paves the way for lawmakers to approve expenditure before their term ends ahead of the August 9th general elections. Now, we're joined by resident fellow at the Global Center for Policy Strategy, Michael Owuor, for more on this. Michael, thank you for making the time and thank you for joining us. 3.3 trillion Kenyan shillings, the last of President Uhuru Kenyatta's budgets. What is your take on this?
Thank you very much for having me. I really appreciate the opportunity. This budget would be the largest in Kenya's history, 3.3 trillion. And when you look at the reasons why it's that large is because it's a legacy budget, more or less. The emphasis more on the accomplishment of the Big Four agenda, and that is where most of the finances are to. So it's a balance, a tricky balance for the CES to balance between accomplishment of the Big Four agenda and also at the same time cushioning the Kenyans' populace from the hard economic times that they're currently experiencing.
We're seeing a budget whose terms are largely to pay off debt. A third of this budget is going to be paying off debt. And I wanted to make the equation in regards to that debt that was taken that is going to be paid off by this budget. Does it equate to the growth expected from the debt that was taken?
There are two aspects to that. First of all is that this is debt that has been accumulated over the course of the administration, which inherited a debt of 1.4 trillion Kenya shillings. Now it stands to north of 7-8 trillion Kenya shillings. And most of it has been was targeting infrastructural products because of the belief that this would be a major contributor to economic growth and opening up of spaces which were previously not open for economic activity. So a lot of the budget and the borrowing that happened went into those projects rather than encouraging demand. And that is what we are seeing now as increase in payments. And it is a challenge that will continue for the foreseeable future for this administration and the next.
I want to look at the big, what have been termed as the Big Four projects that dominated the last 3 to 4 budgets there. When we look back at the legacy of President Kenyatta in regards to those big projects that were largely budgeted for, what's your take on a scale of 1 to 10 in terms of achievement?
I'll lean more to looking at what worked and what didn't work well. I think there's a general appreciation that in this administration, there has been much more emphasis on infrastructure, whether you're looking at the standard gauge railway or the roads or the ports or the airports. That has been the focus of this administration, and it's something that they have done well and commendably. On the other aspects, the results are more or less dicey when you look at the issue of housing, which was estimated, first of all, to have around 1 million houses built. That target has not been met as indicated in the budget policy statement. Similarly, when you talk about improvement of nutrition through food security, that is also an aspect that has not worked so well. And you also look at the universal healthcare coverage. It is an aspect that will not be realized in this administration, but more or less will roll out to the next administration. So you can see with this appreciation of the gaps that are currently existing, that is where most of the money is going to ensure that those legacy projects in the Big Four are closer to completion when it's handed over to the next administration.
Michael, interesting observation coming out of Nairobi. I was looking at the local dailies there this morning, and one of them termed it as the people's budget. The other termed it as an aimless budget. Someone else was asking when it will be a balanced budget. So, different views on this budget. I want your view in that regard. What does this budget represent for you?
My view is that this budget bordered on caution. As you do realize, this is, first of all, a budget that is more or less being undertaken in an election year. So there is a caution from the side of the Treasury to ensure that it does not add to more tax burden to the Kenyan citizens. So there is caution toward that regard. And that is what you see in most of the aspects of the budget, that the key commodities and goods and services that touch on the lives of Kenyans have not been increased. More or less, the tax measures have been frozen. However, there are other tax areas which have experienced increased taxation. For example, advertisement on alcohol, betting, liquid cigarettes. Those are what you normally call as sin taxes. So there is a careful analysis to ensure that, one, enough revenue is raised, and secondly, you are able to safeguard the Kenyan population from the increased cost of living. But equally, making a few changes that will be able to spur manufacturing sector, so that at the end of the day, you are able to see that there is increased improvement in the operation environment for this kind of businesses.